I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
And that. Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, this was a week when the stock market spent most of the week easing back. That is until Friday, when we had another surge on the upside. Mostly at the beginning of the week, there was reaction, some of them harsh, to the poor implementation of the travel ban or immigration ban, whichever you prefer to call it, and questions about what that means for getting through Donald Trump's future policies. So that was, some investor angst out there. And of course, there was some payback by the Democrats. We'll call it left-wing obstructionism as they boycott the confirmations and threats of boycotting the Supreme Court nominee. Also, then the other side, the Republicans are threatening the nuclear option, which essentially means that they would only need 51 votes to pass the SCOTUS. That would be the first time that's ever happened for a Supreme Court appointee. However, Harry Reid, who I am not a big fan of, really set the trend for that. So, it's payback on both sides. There's also lots of angst when you think about what's going on in colleges. They simply erupted over conservative speakers this week, and amazing amount of violence that we saw at the colleges. Really got to wonder about who's really fighting for free speech, right? When you see those kind of reactions, especially to Milo Yiannopoulos, who I'm actually a fan of. He's a really charismatic character, gay, Jewish, and a bomb thrower, right-wing, writes for Breitbart. And I love a man that stands up the way that he does. So I'm a fan of his, and there was really quite an eruption, and his speaking engagement got canceled. So that's kind of what was in the atmosphere and what had investors nervous, and markets were kind of struggling, but not really giving up much ground. Then Friday brought good news, good news being in that President Donald Trump talked about rolling back Dodd-Frank, and that, of course, would be pretty significantly bullish news for the very encumbered financial sector. Local banks really spending huge amounts of money to deal with all the regulations. And more good news, Beyonce's having twins. Well, that might keep her quiet for a while. Anyway, let's talk about what the stock market did. The S&P 500 was down about 1% early in the week, but then it comes roaring back. And on Friday, we're looking at a market that is basically unchanged on the S&P 500. Dow Jones and the NASDAQ a little bit down on the week, small declines. Bond market, a choppy week for the bond market. The ZBs down a little more than, up a little more than a half a point. Friday, they got a lift as there was really low wage inflation in the employment numbers, which were very strong, and that was a big surprise. So bonds like that, they moved a little bit to the upside, and then had a pretty good reversal late on Friday. We've been talking about shorting bonds in the resistance area, and our members are going to see that in our expanded short-term view this week also. So they eked their way upside, got to up a half a point on the week, and then basically gave that back. The dollar is down on the week and groping for a bottom. And a lot of comments out of President Donald Trump is he wants a weaker dollar, and he has been commenting about the Eurozone and really pointing fingers at the fact that he thinks they've manipulated their currency too low. Of course, he wants a stronger euro and a weaker dollar, and he may not get that because the Eurozone's got lots of problems. So we're looking for the dollar to get a little bit of a bounce in here, but it has been really extraordinarily weak. And the inverse to that, of course, is the gold market, silver market, and they had strong weeks. Gold up some $30 plus on the week, silver up about 35 cents, and they really are kind of feeling like they want to go up, but they are running up against some resistance area. We're looking for a feeble bounce in the dollar, and then, of course, more trouble there on the downside. So in the long term, intermediate term, that's probably going to favor the precious metals. Oil also benefited from the weaker dollar and was up on the week about 70 cents as we're here at around midday on Friday. So basically we saw a week when the weaker dollar favored commodities, and we talked a lot about that in our Future Speak video on Wednesday. This is a big week for stocks as far as we're concerned, as it's gotten up to these levels again near 2,300 on the S&P 500. A test of these highs would be huge based on what we're looking at, and a failure below this week's lows would be very, very significant. We'll point that out again also as we look at our short-term view at the end of the show. In our recent videos, we've talked about correction coming that we thought was going to come pretty soon and go out in the next couple of months. We're looking for at least 5 to 8% on the downside, and we're going to know more about this week when we see how, as we're in this resistance zone now for the market, whether or not it can hold up in there or actually give it up and move to the downside. So this, we think, is a key week for the stock market, and it may, as we're going to talk about, end up actually a narrow range, and we'll show you why in those charts at the end of the show. So now let's take a look as we look at our 60-minute chart of the S&P 500, which we look at every week, and just talk about the background news and how that has really affected the market. So here is a look at that at this chart, the S&P 500 for 60-minute, the E-mini S&P. So you can see very clearly that it was really a very sideways week when you look at this, right? As the market, Monday, Tuesday, Wednesday, Thursday was just really moving sideways. And then, of course, on Friday, it got that lift over there. They really did like the employment numbers and the talk about Dodd-Frank and the talk about the low wage inflation. I think that really did help when you look at that. On Monday, you can see that stocks did move lower, but very much as they do on every single one of these days, they go lower and they bounce back up. It was really weakness because of the reaction to the immigration ban. There were demonstrations worldwide at the airports. There were 1.5 million people signed petitions in the UK to keep Donald Trump out, trying to stop his visit. There was a lot of protectionism and isolation fear. And Dow Barron's had a cover that said 30,000 warning, and I'm actually saying it's the warning. They said Dow 30,000. That's often a warning that the stock market is done for when you get that kind of reading. And then there was the talk of Donald Trump's tax changes not coming till 2018. That's what brought that decline right over there. Then on Tuesday, everybody was waiting for the FOMC, and markets were quietly lower. Investors still nervous about the travel ban, and they sold them off earlier. And then when there were comments out of the temporary attorney general, she was fired. So everybody was nervous about that also. But then again, end of the day, the markets moved back up. The employment cost index was up only 0.5%. That was lower than estimated. And that was a precursor to the news that we got for wage inflation on Friday. Wednesday, FOMC news comes out, no change. They're not shrinking their balance sheet. Inflation is a bit more likely to come, that they say, and I really think they've lost their minds. Missing an opportunity to raise rates and get some normalization here when you've got all this potential stimulus out there and stock market near its high. Are they afraid to burst the stock market bubble? Can you imagine that they would actually be thinking about that? I can. EPA earnings were good. That was a big help early in the morning, but then they reversed on the downside. And ADP had a huge beat, up 246. So that was kind of a little warning that we were going to get good numbers out on Friday. Thursday, the Eurozone was in focus. FTSE had big gains as the pound failed. Bank of England upped their growth target to 2%, but they still said inflation was going to be weak. Japan was down 1.3%. And we still had a weak dollar, and gold and silver were moving to the upside, and the stock market just chopped around. You can see just kind of making this kind of triangular formation. And then, of course, came Friday, and the markets moved to the upside very strongly. And here we are moving into the final hour of the day, and the stock market is still holding solid gains, with the S&Ps up about 16 points, and having really for the last 4 hours done nothing, just moving sideways. U3 4.8%, wage increases only 1/10. Bonds rallied on that news and then turned lower, finishing down over 20 ticks on the day. So U.S. stocks up with the banks, and the banks got the lift because of the talk of rolling back Dodd-Frank. Let's take a look at our calendar for the coming week, and you can see that right here, that we have what looks like a week of diminished earnings, not that much coming out. Most of the big ones have come out, so I really don't see any of the really big names in here. Maybe Twitter on the morning on Thursday. I'm long some Twitter because I hear all this deal talk, and I think the pattern is bullish, and I'll show you some of that stuff. And we see that as far as the economic reports go, I don't see anything in here that's moving anything. But what's really been interesting lately is that these rig counts are coming out right over here on Friday, and it's affecting the drillers on Monday. And what that's late Friday or Monday, and what that has been doing is showing increases in the amount of rigs, and that has brought some weakness in the drillers on some of those days. So believe it or not, I'm talking about the drillers, and that is what looks like the biggest news for the week coming out. So not a whole lot going on as far as the news goes and earnings goes. Most of that has been out, and like I said, I think there might be a tight range this week, and we're actually going to see that in the chart when I show you at the end of the show. All right, so we're about to move into the best and worst stocks of the week. All right, best stocks of the week. We're going to put up our charts in here, and we're going to look at what are some pretty good movers for the week. Of course, lots of earnings reports still coming out, and lots of things that I think are really good to look at, and maybe some good setups in here coming up. Really interesting in that the best stock for the week, as far as my gainers in the retail category, stock that was very beaten up is Macy's M. We're going to take a look at that chart right here. We'll look at the weekly chart, and you can see this is what our charts look like with cyclical analysis on them. That is essentially a visual look at money flow, and this is pure art form, done by RV&I manual on 400 different symbols every single week. And our chart subscribers love it. And you can see in here what a cycle looks like. There's your idealized cycle. Those are cycle brackets on the bottom right there. And what they do is that they give us a guide for the important peaks and troughs in the cycles. And cycles are measured from low to low. So you have a low right here, and you have a low right over here, and this is a cycle. And you can see it rallies and sells off, and the timing is pretty good. You can see that right in here. This low actually isn't due out until March. But what we got here in Macy's is a pop. And the news was that they're in talks with Hudson Bay. And that would be really interesting if Hudson Bay tried to buy out Macy's, because this would be the minnow taking the gulp of the whale, because Hudson Bay is about 1/7 the size market cap wise of Macy's, but Macy's gets this big pop for the week, 14%, really a nice move in there. Other retailers, A&F up about 7% on the week, and that looks to us like it has a bullish engulfing on the chart. So take a look at the chart, you'll see it. Dollar Tree up about 5% on the week. JCPenney on a bounce, and we'll call it temporary bounce, temporary bottom, up about 6% on the week. And Costco up about 4% on the week. Their same store sales were fantastic. They were up about 7% on the week, and that also has moved up to an important resistance and has gotten overbought on our readings. So we've got a feeling Costco is going to be pulling back from these levels here. We'll be talking about retails again in the worst of the week in a second, because there was a real divergence in a couple of retailers that got hammered this week on the worst of the week. In the tech sector, we're going to look at a couple stocks here that we don't talk about a lot. They're in our universe and have had some very, very big moves. They were in positive patterns, and you'll see that as we look at CDNS. This is Cadence Design. This is in the semiconductor materials category. We've actually loved the semiconductor materials. We had Applied Materials, AMAT, on our list of best stocks for last year, and it did phenomenally well. And you can see in here that the semiconductors have been doing great, and that puts a lot of demand on semiconductor materials. Note the upward stair-step pattern on these cycles in here. 34-week moving average giving it good support, and earnings huge beat. Analysts upgrading this stock, and they love it. The next one we're going to look at in here is another one in this category of techs called Computer Sciences, CSC, and this one you can see another one that gets a big move on the upside in another cyclical stair-step upward pattern. Cycle patterns in here calling for a bottom right over here. You could see that right there. Well, here's this bottom right here that came a little bit late, and this one right here, nice rhythmic action and in a positive upward trend that just does not want to stop. CDNS, very, very strong move on the upside in there, and worth noting, getting on the overbought side on the short term. So we expect a pullback in there, but then we think that it's going to give you some good buying opportunity if that happens. Take a look as we stay in the tech category at Apple. Apple, stronger than we gave it credit for, actually, moving up also in this positive phase. What's a positive phase? Well, note the positive phase here, and the positive phase here, and the positive phase here. Note the corrective phase or negative phase right here, and yeah, we're getting into that over here. So you can see here that it's gotten through the 78.6% extension and up near the 100% extension, and this resistance from these cycle peaks. That's a spot we expect it to run into a lot of trouble, and we think it's going to roll over and have a correction in there in Apple, as it is overbought. And we'll actually have a little comment about that in a little mention of our option bias rankings a little bit later in the show. So that is a good move on the upside, as Apple beats on earnings and has a 6% gain on the week. Strong iPhone sales, in fact a record, and strong upgrades and conversions. A lot has to do with Samsung and their problem with burning and exploding telephones. That had to help them also. Another stock we'll look at, TWTR. This one up 6% on the week, and I'm long this stock as this cyclical pattern in here is bottoming, and this is a morning star right at the 78.6% fib. As you can see, we have this pointed up to get up near this $21 area, 20 to 21 on our cycle projection right there. So that looks to us like it's pretty good. Here's the daily chart in here, and you can see it's gotten up to some resistance. I'll blow that set up for you. Maybe a little bit of a pullback in there, but then we're going to want to buy it as we expect it to get that move on the upside. So let's look at the weekly chart and daily chart in Twitter. So that's all of the tech stocks that have had good up moves. Now, while the dollar's weak, of course, we've seen stronger precious metals, and precious metal stocks have gotten some big gains. A lot of them getting up to resistance areas. Let's take a look at a couple of them, specifically the silver stocks, which have had some very good moves. In fact, PAAS, Pan American, and AG, First Majestic, both have had 8% gains on the week, and we think they've gotten up to some significant areas in here where they may start to struggle. The gains in there compared to the gains that we've seen in silver and gold have just been huge. Whereas you've had some, 40% gain in here. Of course, nothing like that. And here you could see, again, the cycle patterns as you get the beautiful rhythm in here, and now getting late in that advance up into this area of resistance right up there, and we would expect that it would start to struggle pretty soon. They're way ahead of the precious metals in here, and they, have leverage going in their favor. So, the price of silver goes up, it means a lot more to their bottom line than it does actually to silver. So that's why you get those gains. But we're in an area where I think that it's going to have a problem in there, and we're bullish on these and would like to see them pull back. In fact, look at this one, AG. This is on my list of best 14 stocks for 2017. Note the diamond reversal in there, as it looks like it's breaking out, and the cycle in here actually forming the diamond, which is pretty unusual. So we're going to look for it to get up here, maybe to 11, test that number over there, then get a little more pullback, and then probably have a much better time of it after that. So we're looking for a few weeks potential of maybe struggle in here after it approaches 11, and then moving to the upside. AU up 7%, Newmont up 6% at resistance. ABX, that in the area of up about 6% also. That's also at big resistance. And one of the underperformers in this market for precious metals has been GOLD, Rand Gold. That's one of the best traders in the group. That's only up about 4% on the week and has a weaker pattern. So that is the best stocks for the week. And right now I'm going to show you the worst. All right, the worst stocks for the week, what we're going to look at in here are retail stocks. So I told you there's some strong ones in retail and also some pretty weak ones in retail. The first one we're going to look at here is UAA. That is the new symbol for Under Armour, and man, that has really struggled in here. Take a look here at UAA and look at this movement in here. We made a point of talking about this cycle breakdown right here. You see where those cycle lows were in the poor rally, and then when it broke down under it, it put it at a lot of risk. We thought that it had a lot of downside. You can see our pattern in here and the downside projection. Wow. So this pattern in here, here's the small pattern right there. We'll look for a bottom, a crummy rally, and then more on the downside. This stock down 28% on the week. Just an absolute collapse as far as earnings go, and their sales view way down. Here's the daily chart here, and you could see what's happened in here. We keep putting in these minor resistance levels. You could see one right over here and one right over here. As it moves down this 89-day moving average, momentum here, these red arrows, turns negative right over there, and then this big collapse on the downside. It now has this minor resistance over here, which really looks like you might get a bounce up to 22 or 23, but I really don't think that this stock has got much on the upside at all. So that's UAA. Decker's, DECK. You'll see in here this next one, and this pattern in here projecting on the downside. They're down 20% on the week. Earnings, big miss. And analysts downgrading this one also. So two bad retail stocks in there. And of course, SHLD Sears. Barron's put out an article in there talking about crisis in retail, mentions them last week, and that stock down about 3% on the week. It is it's burning down. That's essentially what's happening. We think the same thing for JCPenney, as those companies have very little chance of recovery. You might hear some more things about sales of real estate or something, but some injection of funds with some banks desperately trying to save them. But the symptoms have been there. We've seen that. They've been just collapsing, and I think it's terminal. So maybe Sears lasts longer than JCPenney's. That's how I'm feeling about them. All right, so let's take a look at another group in here. A couple stocks that I want to mention. UPS is on my list of worst stocks for the year. UPS. This one down 9% on the week. A very big downside move and a very bad pattern in here, as clearly it has rolled over. Here you can see UPS on the weekly chart, as it's had this really horrible week. Their earnings were terrible. Analysts downgrading them, and Amazon comes out and they say they're building cargo hubs, and I think that this stock has been in serious trouble. And this top right over here just beautifully formed. Again, look at the cycle rhythms right in here. You can see the perfect timing between the lows, just what makes the cycles, and now a breakdown under this level right over here. And what that points to is a major top in place. Now, there's a low due right in here in the next couple weeks. We may get a little further down in here. Then you get a rally that's probably this right in here. That would be a right shoulder, and then down again. I would not be surprised to see this stock under $90 this year. And I think when you get this bounce over these next few weeks, potentially, that it is just an exit possibility, or a good way to get out if you get a bounce. This is really a horrible pattern in here. Federal Express only down about 3% on the week, but I think that's a bad one too, and that it is likely to break down in a very similar way. Another stock I want to mention in the coal category, CNX, Consol Energy, down about 8% in the week. Their sales numbers just absolutely plunged. Now, there isn't a lot of coal stocks that you can buy out there because they have done so poorly here in the U.S. thanks to President Obama. And Consol Energy is one that we have believed was an opportunity and a better pattern. Now, with these horrible numbers that came out, the stock is moving to the downside, and I'll show you that right in here. Based on the timing in here and this decline that we're having, and note the perfect evening star formation right in here at the top of that cycle, evening star here, engulfing pattern right over here, just nice patterns, and an evening star right here. So what we're looking at here is about 5 weeks still, and then I think you can buy it. Maybe these sales numbers are just an anomaly, and Donald J. Trump, the current president, is a lot more favorable to coal. So I think this is going to be a good opportunity a little bit later in the year, but it had a bad week, down 8%. Now we have to talk about the brokers, because they have had some week. AMTD, Ameritrade, down 8% on the week, and what we believe is a major top. ETFC, which is E-Trade Financial, a turn down and what we believe is a major top. Schwab, pretty much the same, and let's just put that up, as they're down about 3% on the week. Not that bad. SCHW, and rolling over. We think that this wave takes us down into March in all three of these. And what's going on? A commission war. And that's not good for the potential for earnings going forward, as there's threats of lowering commission prices. And that, I think, is the end of these stocks for a long period of time. So I think you get some bounces in their sales. The next thing that we're going to look at in here, the last group that we're going to look at, was on the downside, are the steel stocks. The worst one in the group was Steel Dynamics. STLD. Now, I really am focusing on this group because it's in the category of worst of the week. Steel Dynamics down 6%, Nucor down 5%. These stocks, I think, are moving into buy areas, and I'll show you that right now. So, like I say at the beginning of the show, is I hope I bring you ideas and opportunities, and I think this is one of them because I think these stocks pretty soon are going to get bounces to the upside. So this is for shorter term view, swing traders holding of a couple weeks to a month probably, and you can see in here the emotion right in here on the cycles and the bottom right in here. Now this blue dotted line is the DBB, and this you can see it often follows that also. So you can see you had a low right over here and then another low right over here. You had a low here, and then as the DBB bottomed, you have a low right over here. So it does follow it. What this says to me is that you're probably going to get a bounce and a pullback following this pattern right in here, and then a rally of all of them together. So we're looking for a choppy period in here, but basically we think the worst of it is over for the steel stocks. Nucor, NUE, you can see that one also in a bottoming area. I don't think it's going to get much below this 34-week moving average. That gives it a little more downside and a little more time there. US Steel actually up on the week, and this is right in our bottoming period. That's those two blue things right there. That's the timing of the bottom. So we think that it has made a bottom and that it is likely to move on the upside. They lost 61 cents. That was a disappointment. And one analyst, however, went from sell to buy on the stock. We think the group is all buys. It might take a little more time to get the bottom set in there. Let's take a look at the daily chart here in X, and you can see in here what we're looking at is that, well, maybe another week or so playing around. We see that support right there, and I think if it gets down near that 30.5 or $30 again, it's going to be the super area to get long that stock. So good looking stocks in there when we look at those cyclical patterns in the steels, and I think that we're going to see a pretty good opportunity in there. So we're about to move into the towards the end of the show when we do our short-term view, but I have something just a couple of minutes long that I want you to watch right here that, well, I think you're going to find exceptionally interesting, and I hope that you take us up on a special offer. All right, I'm just going to take a couple of minutes here. I want to tell you about something exciting, an aspect of our Level 3 membership. Level 3 is rankings and trade setups with a ton of information, but one part of that is called option bias, which is really a big help to option traders and short-term traders also. I'm going to take you actually to our website so that you can see where we have that, and I think that you're going to find this very, very interesting. So here you go at rankings and trade setups as we go into our dashboard. That's the top right over here. I'm going to click on that dashboard on the top right, and it's going to take us into our dashboard area. You could see all of our video categories in there, and specifically want to look at the tile which says rankings and trade setups right there. Going to push on that icon, and it's going to bring you to our rankings and trade setups page. Just going to really explain this to you really quickly. As you can see right in there, what we have is a bunch of colors, right? These three right in here are our different time frames: long-term, short, intermediate term, and short-term momentum rankings and cycle rankings. This is where our trade setups go right over there. You could actually see we're short Home Depot in that right there. And this is our option bias rankings. These are the ones that I really want to point out to you. Let me tell you briefly how this works. What we do is we use intermediate and short-term indicators in here to give us a sense of momentum and for when something is extremely overbought or oversold. The rankings go from P3, which is the most positive, you can see that right here for FCX, to an N3, which is the most negative. You can actually see that here for Celgene. The odds are pretty good when you have those rankings that the momentum is going to continue in that direction. But when it gets very overbought on the upside, like Apple is right now with that P1, then you get reversals. How often do you get reversals? How long does it take? And how much quality are there when you look at that? Well, actually, there's a lot of quality, and I'm going to tell you briefly about that. What happens is that when you get those P1 rankings or N1 rankings, it takes about a few days to get a reversal. That means they're extreme oversold or extreme overbought. How well do you think it would help your bottom line if you had a good idea when something was going to reverse? Well, these rankings have reversals within just a few days. And how they've been working? About 2/3 of them, 66%, have had significant reversals within 6 days. In other words, great trades for option traders. So you don't stand in the way of those big moves. As a matter of fact, with our option bias, you benefit from it because you know what direction to have your options position in. At least it will be a high probability you'll be in the right direction. But then when you get those orange colors, P1 or N1, you know that a reversal's pending, and that's the time to do those other kinds of trades that are actually going to take advantage of a reversal. You don't stand in the way of these big moves, but you get a heads up when they're about to reverse. Fantastic information. And when you consider that about 66% have had significant reversals within 5 or 6 days, just fantastic. I think you'll love it. As a matter of fact, I want to give you a special right now. Half price, try it for a month. You'll get all of our rankings and setups. So that's our trade setups on a daily basis, plus option bias, and all of our 200 plus videos, $43 for the first month. How can you not do that? It's incredible information, and you will love our service. I hope that you're interested in that. If you want that special link, send me an email to slim@askSlim.com. That's our great preview of this. I think you'll love it. All right, we're going to get to our short-term view for the coming week. We do this every week. Remember that our members get an expanded view with 5 major markets. We look at the momentum indicators, the comparisons within the group. Really fantastic. And what we're going to do right now is look at the short-term view of the stock market as we look at our daily chart in the S&P 500. So what we do is we take an accounting of what we said in the last week. Generally, we were pretty good in the S&P 500. What we thought was that it was going to have a dip and then move to the upside. Now, this is our weekly look at the stock market right here. And you could see the reason I have this here is I want you to see this important resistance area that it's up to right there. Those are big numbers, and it's been stalling from there. Let's take a look right here. So in what we expected for the stock market was that it was going to have a dip, and then we said somewhere it would get down into the support area between 2279, 2285, and then set up another try to the upside. So you can see that basically was perfect as you got this dip right down over here to the support. It got down just a few pennies lower than we thought it would, and then by Friday was turning back to the upside. So this is your short-term support area right there. We also have a minor support area in there that is rising based on this distance right over here. And we have major resistance right over here at this 2300 or slightly over that. Now you could see we're moving back up there. So the reason that we believed that we were going to go down and then up was that we thought that this cycle pattern in here was pushing down and then we would rally. Now we were unsure last week about the pattern and whether or not this important 14-day low was the bottom of the cycle, which would have been very short, or we were going to get some bottom over here, and we actually got it on day 20. Now, when you get lengthening cycles like that, that tends to be bearish. This was 19, this was 20. You could see that right there. And now we're in this double rising zone. That's the same thing as right here and the same thing as right here. At the beginning of the show, I talked about the importance of where we are right now. And if we get under this level, which was about 2269, it's going to be really bad because it's going to have turned this pattern down already. Now we're accelerating to the upside here on Friday. I'm actually calling for this to stop it on the upside, 2303, something like that. But then having a hard time making much downside because this big cycle is pushing up. This small one will go into correction right there. And what that's going to mean is probably a range right in here around 2303 to 2280 in that area right there. We're going to call for a tight range this week. Then another try over here, but then that's the key. If we can't break through here and we start to fail in this area, which is about 2 weeks out, that's going to set up the beginning of the topping process that I think we're actually getting in right now. So just for a little explanation, what this means is that this cycle right in here is the black dotted line, and these cycles right in here are the blue dotted line. And you can see how we have it projected, that it doesn't get through, it gets a pullback sometime towards the end of the week down to that support area and then bounces. That's why we have a tight range of what we're calling for right in here in the next week. And after that, I think the risk is going to go up in the market for some significant correction. So that is what we think is going to happen for the stock market in the coming week. Boy, we covered a lot in there. I hope that there was a ton of information in there that was valuable to you. And you can write me at slim@askSlim.com for that special link, or if you have any questions or comments, love to get your feedback. That's it for the week. Be careful because it is certainly crazy out there. And we're always wishing you great trading.